Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment. That's going to be Landon Swan, co-founder at Likefolio. Welcome back to the show, Landon.
Thank you. Good to be here.
All right. So we're talking the consumer. We're talking spending. And, we've hit on this repeatedly over the last several months, the demand for travel, international travel, business travel starting to pick up. That's right in the wheelhouse here for American Express, as that maybe the higher-end consumer continues to spend pretty readily. When you guys look at your data at Likefolio, is it kind of supporting this nearly 20% rally we've seen so far this year?
So it depends, right? We've got a couple different data sets. When you look at the social data, which is one of my favorites, and we compare it to Discover and Visa kind of on a scatter plot, you can see where American Express lies. They're actually doing the best as far as consumer demand. And they're kind of middle of the road when it comes to happiness. You can see there. So more to the right is better with consumer demand, and then higher is better with consumer happiness. So Discover slightly beating on happiness, but overall they are doing the best when it comes to consumer demand. And when we look at just web visits, people going to AmericanExpress.com, that's actually up significantly, up about 9% on a year-over-year basis, steadily climbing. So that's just an indicator of people, visiting the website. Obviously, the more people that visit, the more people are using and signing up. So definitely positives there. I would say, though, that with this, where the stock is at right now, we hit around 180 in February. We're kind of getting up in that area, and it's, I'm not a big technician, but I will say that anytime you see a resistance level like that goes back 5 months, you got to kind of at least consider it. So we're getting up in that area. So that's a concern. We also have some concerns when it comes to just general consumer trends. We know that credit card debt is up, savings are down. Even new data is starting to say that second mortgages are going up. Inflation's always a problem, and income's really kind of stagnant. So everything that you would want to go a certain way is going the other way when it comes to the consumer. But as you guys talked about, this is the higher end consumer, and we've seen in our data a bit of a dichotomy where you're either doing well enough to afford things, and you're kind of shaking off this mini recession, or you're shaking off inflation concerns, or you're really being impacted by it. And I think American Express customers are generally in that first category. So they're going to be a little bit more resilient on that. So, where we're at right now with American Express is kind of neutral. I think if the stock were much, much lower, if it were 10 or 15% lower, I'd probably lean bullish here. But because it's run so much and it looks pretty strong, I think that expectations are high. And I'm guessing that things are going to come in line or maybe slightly disappoint, but we're not taking a huge position on AXP going into this earnings call.
Landon, what differentiates American Express from, say, Visa and MasterCard is they hold balances. Right? So they do better when interest rates go up. That's one of their income silos. Visa and MasterCard really don't do that. They make money off the swipes and the fees like American Express does. But I read a really interesting article that says where American Express is most aggressive in getting new customers, and their new cardholders up 3.4 million versus 3 million last year. They go after millennials and Gen Zers, and they go hard after them because the data tells them once you get one card, you usually stay with it for most of your. So they're getting these people young, these young millennials and Gen Zers, and they're getting them in the house. And boy, that really bodes for a good future for a company like this, Landon.
It is. It's a smart strategy, and you're right. I think once you have a card, you tend to stick with it. You get used to the website. You get used to how it works. And there's some advantages to American Express. They charge merchants a little higher, which means they're able to give their users a little bit higher rewards. They're just basically taking it from the business and giving it to the user. But as a user, why not, right? And also their chargeback or their dispute policy is very, very favorable to the consumer. So versus the others that goes through a little bit more of a process. So I think it's probably the best product of the three when it comes to the consumer side, and the worst for the merchant. But you got to take it as a merchant. But to that point, we just talked about how maybe there's a little bit of resilience among their consumer base because they're generally a little bit better off. But if they're going after the younger clients and trying to build in that lifetime value, which is smart, then it's also going to work both ways, where this type of economy is going to be a little bit more impactful for that type of user. So if they're going to weight their user base a little bit younger than they have been, a little bit lower income, then things like this are going to try on them a little bit more than they would had they not done that. Still, it's a smart move long term, but just be aware this removes some of their resiliency to the effects of a bad economy.
And when you look at that comparison between other credit card companies and happiness levels like that, Landon, because it's the high-end consumer, do we get any decent happiness numbers, maybe where they outperform a little bit? Discover Financial, that stock's getting hammered today, but they had a little outlier in some of their earnings. This might be the quarter where guidance kind of dictates what's going on. Are they seeing any softening from that higher-end consumer, right?
Right, exactly. And you talked about Discover. We were negative 43 on the earnings score for them. Now, that's not why they went down today, right? They're down 16%. It's not because their business is off. I mean, they've got regulatory concerns. They're stopping their buyback. There's things that we wouldn't have predicted. So I think that Folio customers are kind of getting lucky today, hitting it as big as they would have, not as big as they are. But just to give you a little perspective, so Discover was a negative 43. Visa next week is a plus 38. American Express is negative 16 right now. So we'll see how that shakes out. But American Express kind of just in that neutral zone within 20 points of zero, leaning a little bit bearish. A lot of it has to do with just how well the stock has run. As you know, generally we use the stock market as expectation guidance, and if the stock's really high, expectations are high. It's kind of why one of the reasons we were so confident into Netflix yesterday, because the stock had just run so much that you've got to just kill it in order to hold the stock price. So that's why we're just slightly leaning bearish, but probably not enough to put on a trade.
All right, great stuff, great data as always, Landon. Appreciate it.
Thanks, guys.
All right.